Joining me now is Corey Diaz, the co-founder and CEO at Anfield Energy. Great to see you again.
Good to see you, Mark.
So let's get a refresher from you, because we talked to your chairman, Ken Mashinsky, a while ago. A refresher on the model. You have a hub and spoke model, your near-term, mid-term, long-term projection to produce uranium, vanadium, and you've got the Shooting Canyon Mill at the core of that strategy. So again, a little update.
Sure. So, we talked about it, the hub and spoke. It's kind of like a bicycle wheel. At the hub is the Shooting Canyon Mill, one of only 3 licensed and permitted mills in the United States. And the current spokes related to that hub are the West Slope, the Velvet Wood, and the Slick Rock mines. So the aim is to get economics for all of those projects tied into the mill. And then as we advance the mill towards restart, those will be the first mines that would go into production that would feed that mill.
You continue to add to your portfolio of assets. The recent one is the Dripping Springs quartzite uranium project in Arizona, and you've got some historical data there, and you've also got 8 past producing mines in the area, correct? So is this just a natural fit into the portfolio?
It is, and when we talk about our portfolio, we've got a primary side and we've got a secondary side. The primary side I just mentioned, the Velvet Wood, Slick Rock, West Slope. The secondary side includes the quartzite acquisition, includes Artillery Peak, Frank M, and Finley Tank. So we're looking to build out that other secondary portfolio, which creates a long-term pipeline once we've depleted our primary source of uranium and vanadium.
Right. And Corey, you also have this reactivation study going on at Shooting, and your chairman, Ken Mashinsky, he said that this will give you a roadmap in terms of cost and timelines to refurbish it. And we've talked in the past, you said roughly that may cost around $25 million. So can you get us up to speed on that?
Sure. So it continues to move forward. We've had the PSC staff at the mill. I just met with them a few days ago at the mill to walk through the mill and get a better understanding as to what pieces we can keep, what pieces we need to get rid of, and how do we procure new pieces. So it's very positive. Things are going well. We still think the timeline on Q2 is reasonable, and so does PSC, so we're happy and we're waiting.
And then other catalysts, a preliminary economic assessment on Slick Rock in Colorado, that's coming, 43101, Date Creek and Artillery Peak. So what are the timelines on those?
Well, I think we've got a number of PEAs coming up. So we've got an updated Velvet Wood PEA, we've got an updated West Slope PEA, we've got an updated Slick Rock PEA, and all of those are expected within the next 30 to 60 days. The other assets, Artillery Peak, Marysvale, or Calf Mesa, we're looking at resource reports probably in the second half of the year, because we're going to be focused on the economics related to our primary resources.
So it sounds like a lot of news flow coming the next while, a lot of potential catalysts. You've got the assets you're talking about, you're a near-term producer, you own the mill, you've got growth potential, but are the markets fully rewarding Anfield right now? I look at the stock and it's just kind of sitting around 8 cents, doesn't seem to want to budge right now. What are the markets not quite getting?
That's your guess is as good as mine. Look, like any CEO would say that its company is always undervalued, but I think it's true. When we look at the valuation of companies in our sector, U.S.-based, near producers or producers, we're trading at 1/7 of the smallest of those companies in terms of market cap. We're trading at 1/33 of the largest of those market caps. So I think that there's significant upside. I guess that's the one takeaway I have, is that there's significant upside inherent in our story for us to meet at least the smallest of that group. So we think that maybe we're not as well known, but I think ultimately as we continue to put out positive economic news and people understand our hub and spoke strategy even better with the economics, hopefully we'll get some kind of reward from those numbers.
So you think just organically, eventually, investors will start to pick up on it? Is there some frustration where you're going, look, we're sitting on this great story here, and come on, let's go?
Yeah, there's always frustration, but ultimately all we can do is produce and show the market that we're advancing these assets, and that's what as we put more news out, people understand the story even better. I think in some ways, people don't focus on the smaller stories as much. They look at the market cap and make an assumption as to us being an exploration story. But as we tell the story, as we highlight the mill, as we advance the mill, people understand that, this is actually a production-related story. Don't forget, there are only 11 processing facilities in the United States, of which there are 3 conventional facilities, of which we own 1. So there are only a handful of parties who can actually produce in the upcoming uranium bull market, and we're one of them.
Great to catch up, Corey.
You too.
All right, good stuff. Corey Diaz, co-founder and CEO at Anfield Energy.